Hello and welcome to Buy Africa, the show where we focus on investment opportunities around the continent. I'm Tshepho Modiba, and thanks for joining me. Tonight, I'm joined by Maurice Madiba, Founding Director at Cloud Atlas Investing. Maurice, thank you once again for joining us. It's always a pleasure having you on the show.
Yeah, thanks for having me.
Let's take a step back this week. Let's look at the continent from an investment perspective. Certainly, when I look at emerging markets now compared to a year ago, it looks as if we've collectively, or emerging markets have caught their breath, right? Currencies are strengthening, equity markets looking okay. Is that the same picture for the rest of the continent?
So a lot of this is driven by the Fed looking to increase the interest rates and how the market is sort of trying to place their portfolios around that. If you look at this time last year, there was a lot of concern about outflows from emerging markets back to developed markets, which then didn't quite have the impact that people thought it would have. And the delay in then hiking rates post-December last year has just seen a lot of flows going back into emerging markets. And unfortunately, those flows have avoided your frontier markets, which is where a lot of African markets are categorized.
Why is that?
So there's a number of reasons. If you look at some of our major economies, one being Nigeria, people are calling for the adjustment in the currency because they thought the fixed rate was not going to work as the oil price had declined quite significantly and wasn't showing any signs of recovery. So eventually, with the policy stance that the central bank had, it took them a while to then adjust the currency and introduce this floating regime. So that hurt the Nigerian economy quite significantly. Similarly with all other oil exporting nations. The one that did see an increase in FDI flows was Kenya, which was telling quite a good story. It is close to the election time as well, but it was showing pretty high growth of about 6%, and it managed to get some of the flows.
Right.
But as for the rest of Africa, those flows had evaporated.
Okay. Now, with that backdrop, your business's area of expertise is on indices that invest in the rest of the continent, right? Which of those indices right now are looking like they're presenting decent opportunities for investors looking to profit in surely what remains a good story?
Yeah. So we look at a lot of different sectors.
Right.
And if I was to pick out some of the sectors that I'd want to talk about, the first would be food and beverage, which links heavily into the consumer on the continent and what areas are affecting that.
Okay.
And then the second would be the one that's actually posting positive numbers year to date is telecos. Telecommunications is doing pretty well. But if I look at food and beverage and what's the issues there, I mean, sub-Saharan Africa, a lot of it was affected by the drought last year.
Right.
So you're seeing a lot of the countries like Kenya and Nigeria posting pretty high inflation.
Before cutting you off, that food and beverage index, does that take into account the producers or is it just the retailers of food and beverages?
So it is the food producers and also beverage companies. So you've got the likes of Nigerian breweries and their East African breweries. So those Delta in Zimbabwe, Inscore, so those type of producers are there. And if you look at what they've struggled with, it's being a lot of inflation, a lot of it driven by food prices increasing.
Right.
The lack of power generation also affecting that industry quite heavily. As you know, Africa sits with about 60% of its continent without constant access to electricity, which is a fairly high number.
That's a scary stat.
Very, very. And I think if you look at that, how that industry is going to turn around, as inflation starts to come under control, and particularly food inflation has been pushing up general national inflation. In the likes of Nigeria, they're a very food importing country, and that hurts them quite a bit, which is why the inflation is sitting at 17%. So we have to start to increase our power generating capability, food processing capability, to see that sector do well. And the other thing that's driving that is the agricultural side of things. So if you look at Africa, we've got about 440 million hectares of land that we can still sweat and have pretty decent food production where we can be self-sufficient in terms of food. But that still has to happen, and that now becomes a policy directive from those in authority.
So what you're saying is that the sector is really also dependent on some of the infrastructure spending or growth in infrastructure that we're likely to see in the continent.
That's right. And another thing which is going to boost that sector is participation by the youth, interestingly. So the African Development Bank invested to set up a facility of $1 billion to invest in African agribusinesses. And the one thing that it does need is heavy infrastructure spend. When you see the commodity cycle moving upwards, there's not a lot of spend on infrastructure, sadly. It's only when it's in a downturn that governments wake up and say, okay, we need better roads, better ports, and more electricity generation.
All right.
But beyond that, there hasn't been much focus. And you start to look at the youth demographic of Africa, which is going to be the breadbasket for this continent. How many of the youth are interested in going into the likes of agriculture or food production?
Right.
Yeah, you find a very low number there. So there has to be directives at the top to both build the hard infrastructure that's needed to make this sector work, and also the soft, getting skills in there, getting the youth involved so that that industry can grow.
Now, we know what should happen. You've just frameworked it very nicely. I guess the key question for investors in the sector is it likely to happen? And from there, are you likely to benefit?
Yeah, so if you look at it purely on the food and beverage basis, it's going to take a couple of years to get that right.
Right.
So what we've done is we've then created a consumer index which combines food and beverage, which combines retail, and telecos.
Right.
So you look at what people are actually consuming and you put that into an index. So you'd find that index has held up fairly okay. It hasn't done great. It's still down double digits.
Right.
But you look at the potential or the impact that could have on growth. So if I look at telecos, which is up about 11% this year.
Why?
Yeah, it's interesting because telcos usually does well when there's the introduction of new technology.
Right.
So you've seen a shift out of people making calls, fixed line, then into mobile, then from mobile into data, then from data into faster data.
Right. So
that's what's really driven that sector up quite well. And you're starting to see a lot of fintech being developed and adopted in the likes of East Africa. Safaricom is really boosting those numbers up pretty well. It did a double-digit increase in its earnings. So you're starting to see that sector is doing well. And as it rolls out on the continent, as you know, there are some markets like Botswana where there's high mobile penetration, but other markets like Ethiopia where it's still sub 60, 60%. So as those numbers look to increase and the mobile operators start to capture that opportunity, there's a lot of growth available in that.
So the upside from a growth perspective, the thesis is it remains the case.
Yeah.
In terms of margins for the sector, I know you talk of the evolution from voice, which was originally high margin business, to data now, which is a little bit lower margin but faster growth. What does that picture look like for the sector, for telecoms, and will that mix end in positivity for the sector overall?
So margins do decline even with the likes of data. As the mix of voice and data was starting to take form, you found that data had high margins, but now with all the competition, those margins have come off drastically. But the area of growth is not necessarily in increasing margins, but in increasing penetration.
Gotcha.
So the more people that have access to phones and that are using their phones with data capability, then the better it is for the operators.
Okay. In terms of scope for new technologies and the innovation that we've seen coming out of East Africa in particular, in the rest of the continent, do you think there's potential for that? And does that bode well again for the index as a whole?
Yeah, so massive potential. If you look at one of Safaricom's money spinners, it's actually M-Pesa.
Right.
So that does very well. Nigeria is also starting to develop on its technology. So there was an app recently launched where people can buy goods on their mobile phone, more for Africa, which you've seen quite a huge uptake in that market. And it creates a lot of downstream businesses, which is the benefit and why people should adopt it. You look at the likes of Uber, how that's grown in South Africa and how that could also grow in other markets. So with the use of technology, the consumption, if it provides convenience to consumers, provides them access to goods that are potentially difficult to get at this particular stage, then there'll be a massive uptake and massive growth. Then also the downstream industries, transport is going to benefit a lot from mobile application development. I think last time I was on the show speaking about Kenya, people selling roses, it sells roses out into Europe.
Right.
You know, and if you develop an application, people can buy roses through this app. You create both access to market for the growers, and also you create downstream jobs like people to transport from the grower to the consumer.
That's a very powerful point. In terms of the telecom sector utilizing this technology, is it then becoming implicitly competition for some of the other sectors? Banks immediately come to mind, especially with the low banking penetration and the advent of mobile banking on the continent.
Yeah, banks are unfortunately heavily regulated, but they need to look at adopting technology a lot easier. A case in point would be two. The first one would be if I look at Nigeria. When people are trading foreign currency and your central banks have official rates and people can easily access the parallel market because it's available to them.
Yeah.
I don't think the volumes are comparable, but if you had more banking penetration and banking sector using more applications to then access to get people on board, it would bode very well for that economy. Then I look at the likes of Kenya, where banks have been capped in their interest rate at a 4% spread.
Yeah.
And what can banks do now to increase loans? Because what you'll find is there's going to be another parallel market where those who can get access to credit will start on-lending to other people that the bank would traditionally lend to. So you're going to have another parallel market if banks don't start to adopt technology and make it easier for people to bank and transact with them.
So all in all, the outlook for telecoms, taking this into account, is quite positive.
Positive, yeah.
Okay, let's leave it there. Okay. Thanks to my guest, Maurice Madiba, Founding Director at Cloud Atlas Investing. That's all from Buy Africa this week. Remember to follow me on Twitter. That's @Modiba_Tshepho. And send us your thoughts about the show using the hashtag BuyAfrica. From myself and the team, goodbye.